Good morning and welcome to the ADS Securities Fundamentals Update for today, looking at the major economic figures that were released during the Asian session and the preview on the upcoming two sessions. During the Asian session today, another disappointment came in from Australia today, which raised the speculation for an action by the Reserve Bank of Australia in its next meeting, as the economy lost 3.7 thousand jobs in January and an unemployment rate rose more than expected to 6%, while it had been anticipated to rise to 5.9%. Along those lines, AUD/USD tumbled, the Aussie dollar tumbled below 0.90, again reaching as low as 0.8943, while any upside move, according to the fundamentals, is likely to be limited below 0.90 as well. Going forward to the European session today, there are few economic figures will be released, but the volatility is likely to remain high after a few days of low volatility since the beginning of the week, as all eyes were headed toward Janet Yellen testimony and the Bank of England inflation report. German final CPI set to be affirmed at minus 0.6 in January, and Switzerland PPI set to decline by 0.1% in January as well, comparing to no growth in December, while the ECB monthly bulletin will be released at 9 GMT time. As for the US session today, traders should keep an eye on the figures that will be released today, as it might confirm the QE tapering effect remain in place. Retail sales is expected to show no growth in January, comparing to a rise of 0.2% in December, while core retail sales set to rise by 0.1 comparing to 0.7 during the same period. And finally, US jobless claims set to stabilize at 331,000 last week. In the meantime, any negative figures, especially for the month of January from the US, will raise the speculation for opposing in the tapering process in March meeting. However, it would be too early to judge, as the Federal Reserve next meeting will be held by the end of March. Until then, we will be watching the figures very carefully to assess. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest in breaking news, reports, and analysis. This is it for today. Thank you for watching.